Aspen Pharmacare is a rising star in the global pharmaceutical industry, supplying branded and generic pharmaceutical products in approximately 100 countries. It was founded in 1997 by Stephen Saad. It has a market cap of 86.8 billion rand and a price to earnings ratio of 27. It currently pays no dividends, but distributes an annual amount by way of a capital reduction, producing a yield of about 1%. Can you explain that to us first?
No, there are some companies which for one reason or another have this large accumulated reserve. So instead of a dividend, they pay out cash, but it's deemed to be a partial capital realization. It doesn't really matter. It's a
It's the same
dividend
thing,
by another name.
effectively.
Yeah. Well, you get the cash. That's what counts.
Well, it's
That's
all you
what
want,
you want,
isn't
yeah.
it, at the end of the day? Well, Aspen, you can't argue against this story. They came out with results recently, and Stephen Saad saying that Asia is set to be bigger than South Africa by the end of this year, I believe.
Definitely. I mean, in terms of Asia, just the potential of Asia, I mean, it's massive. It dwarfs South Africa. And if you look what they've managed to do in the last 15 years in South Africa, if they take that same management approach to Asia, if they do manage to bed it down properly, the share can really balloon to a massive amount.
So at your peril not to have this in your portfolio?
At your peril to not have it in your portfolio, particularly as a defensive share. I mean, that's for the topic this evening. Whether it's good times, bad times, people are going to get sick. People need pharmaceuticals. People need medication. And whether you're on medical aid, national health insurance, whatever, whether it's government paying for your medicines or Discovery paying for your medicine, you're going to be, wanting pharmacare.
In fact, you could argue that it's double defensive because in tough times there's more stress, you're more likely to get ill.
Yes, there's that, and many conditions which used to not get treated now are. So antiretrovirals is an obvious case in point, but of course they are big in all sorts of other things: antidepressants, heart condition stuff, things for cholesterol, all that sort of stuff. So if you look at America, they spend 20% of GDP on healthcare-related expenditure. In countries like South Africa, Indonesia, the Philippines, it's like 3%. So that's where we're going. So that's why the stock's doing well. That's why they're delivering in a great environment for them. It's a fantastic success story.
The upside here is limitless.
Look, they did brilliantly to buy that Australian business and then to roll it into
Sigma Pharmaceuticals.
Yeah, they took out all the cost and kept all of the sales. And they've gone into Latin America, done a great job recruiting people to help them sell. I think it is a management execution story, though. Forget that this is dependent to some extent on Stephen and Gus and the guys there, because they are the business.
Is that a big risk for you, the fact that Stephen and Gus and the guys are the business?
I think at this stage it's an asset. I think the business is still in a rapidly growing environment. I'd rather be in the company that's doing the acquiring as opposed to a Cipla or potentially Adcock Ingram at the moment, who are the guys who are being acquired or having bids put out at them. From a longer term investment potential, I want to be the company that's actively growing. I want to be the guys who get to choose what costs they keep and what profits they take.
Downside risk here?
I see very little. The other point, which to follow on from Warren's, is that they have this tie-up with GlaxoSmithKline, which is like a $100 billion market cap pharmaceutical giant, but it's one that hasn't really done much in recent years. So they stuck some assets into Aspen because Aspen gets them a higher PE, higher rating, more excitement, including some old ex-patent stuff. And I think you're going to see more deals like that because Glaxo's under pressure now to get things cracking on. So why not do more deals in exchange for shares or cash deals, just to kind of get things going? So Aspen's got some great potential in that relationship.
Your clients are exposed to this one?
Yeah, no, we're very much invested in it. We're in the hot stocks portfolio in this stock. It's done very well for us. It almost got to 200 Rand a share in recent weeks. Has sagged a little bit.
But you weren't going to give it up at 200 anyway.
No, I think it's even a better opportunity now. But look, again, high PE, great success story. Look at the share chart.
Hot or not, Warren, on Aspen?
Hot on Aspen.
Hot or not, Paul?
Yep, still like it.